Hello folks, welcome to another Bitcoin market analysis by Inspocrypto or reg market. That's the only thing, reg market, because that's what it is. It's a reg market. It is, unfortunately. It was a great market, but since 2021, it's just a reg market. It's all about to reg you, to liquidate you. It doesn't matter if up, down. As soon as you try to go, well, obviously, as a gambler, high leverage, they will liquidate you. And we have seen that in different moments. We have also seen, for example, just this moment here. That was absolutely insane. I show you that in 5 minutes. Because I was actually tracking what they were just doing. And someone really tried at once to sell, not really big, but it was, you know, just almost 150 bitcoins at least on Binance. And look what what happened with the market price. It dumped. I mean, obviously, I guess they just use different markets at the same time to sell. But in that case, it was maybe just a test or something like we had just, for example, the days before. In my opinion, they are testing. They are just checking or testing, or it was really just a noob who thought this market is extremely filled with liquidity. It doesn't matter how much bitcoins I sell. They are just waiting to absorb them. It's not the case. It's not the case. And Keiko I have tweeted about that. Finally, they can confirm what we were talking about. Even yesterday when I tweeted from Arkham, for example, what they are doing, right? I mean, I need to check here. It's this here. It's this wallet here. If you check this wallet, if that's not obviously wash trading, tell me what it is. Market making, that was a joke yesterday. Yeah, it was a very funny one. But they are just identical volume. Buying, so taking out from hot wallet. Because you need to understand what a hot wallet is. You have a deposit wallet. It seems, at least, just based on what he said just a few months ago. Deposit wallets on Binance are also cold wallets, something I didn't knew just before. I didn't know that. I just really thought they have for just only custodian purposes cold wallet, but it seems they also use for deposit wallets cold wallets, maybe because of security reasons. It's possible, I guess, as well, because whales like to send bitcoins in advantage to a centralized exchange, so deposit wallet, and it would then make sense to maintain those in a safe environment. So obviously a cold wallet. That's at least my understanding. Be careful. I'm not saying that I'm right, but otherwise I don't know why they are using it. And hot wallet is a wallet with high traffic, because they are getting from different Binance deposit wallets, getting the bitcoins and other, obviously depends on the chain, but also other assets to trade. Means to convert, for example, from Bitcoin to Ethereum or other assets, or just to sell it. To sell in stablecoins, USDT, TUSD, and so on and so forth. So when you see that one wallet, so if we just check, for example, that here, just as a little example, we see, for example, that one wallet, the hot wallet, is sending to another wallet 150 bitcoins. And this wallet is then sending, it seems, just one wallet, here one wallet. It's not linked to others, because otherwise you have, for example, +5, +9. Then you know it's almost linked to any algo trading. If they have, for example, 10, 20, 30 wallets linked each other, is because an algo is behind, and they use obviously different wallets to send, to receive. Algorithm just, you know, buy, sell, buy, sell, buy, sell. But usually they are just using 0.3 bitcoins, 1 bitcoin, maximum 2 bitcoins or 3 bitcoins. They never trade big amounts, 30, 40, 50 bitcoins at once. Usually only if they really just to trigger FOMO or fear. It depends. But usually we are talking about few bitcoins or even only satoshis. Anyway, when you see that someone is getting from hot wallet 100 bitcoins to that wallet, this wallet is resending those 100 bitcoins to another wallet, and this wallet is then sending all these 100 bitcoins, 150 bitcoins back to deposit wallet, that smells like wash trading. Because the only thing what they are doing is relatively quick to send their bitcoins, let them circulating, just create volume. That's the only thing what they are doing. And yeah, since last year, when Binance just decided to stop its zero fee promo, the volume dumped a lot. So now we can say, well, now it looks like we can see what is the real volume. No, we can't see that, because Binance has obviously just had the great idea to say, look, we have a different stablecoin now. Fuck BUSD. We take TUSD. It's the same shit, even worse. Oh no, it's the same shit. It's not even worse. And we use that now also for our wash trading purposes, because we will also announce a zero fee promo only with TUSD. They are doing exactly the same shit, just like before, but with TUSD in a very controlled way, because they only have 3 billions in TUSD. It's not unlimited, like for example with BUSD, with USDT. Yeah, it's unlimited, because, you know, and TUSD, I mean, we know with the prime trusts, call-ups, and the whole thing, nobody cares. Absolutely nobody cares. Not even the regulator cares anymore. It's really great. I mean, if we had Wild West, and always the risk that the regulator is going to take any action, now we can say it's, well, a rule-less environment. We don't have any kind of rules. And of course we will say, welcome BlackRock, welcome for spot ETF. Are you fucking kidding me? For spot ETF? Ah, come on. It seems the future of this market is pure futures. Futures, liquidating them. I mean, to be honest, why not? It's really simple. For every central exchange, it's the best case. You can liquidate your own customers. You have all the data required. I mean, the guy who is just thinking that even centralized exchanges are not talking each other. I mean, I don't remember what investigation, or it was the FTX collapse, that showed that they were very well organized on different communication channels, where FTX could just make some discussions with Binance, and I guess more exchanges as well. So obviously that's not market manipulation, and that's because even banks are doing it. I had today, for example, just a discussion with my banking client, because we were talking about a certain topic, and he said, yeah, but I didn't know about that. And I said, but you didn't know about that. But listen, you are in Frankfurt. We have the Deutsche Bank just, you know, around the corner. We have the Commerzbank. We have I don't know, hundreds and hundreds of banks there. Are you not communicating with them? Because I know from other customers they are doing it. When it comes to regulation questions, when it comes sometimes even when you are introducing a new system, they talk each other to exchange knowledge. Obviously that happens to centralized exchanges as well, and that's if it maintains that level, something where I would say, yeah, obviously that's great. Exchange just knowledge, how to make regulation better, how to, you know, a lot of different topics. Yeah, that's great. Just best practice and so on and so forth. Obviously not when it comes to manipulate the market price to liquidate your own customers. That's something, I don't know if that's happening, ha 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 ha, but in case of, it wouldn't be cool. So anyway, 70%, nearly 70% of the Binance spot volume plumped in 2023. 70%. Well, I remember in 2022 where some academics were just saying that almost 80 to 90% of the whole Bitcoin spot volume was wash trading. People were laughing about that. But it seems they were right. Oh, that's really strange, isn't it? Well, it's not. Because why wash trading? Just to show you how good this market looks like. Everything is extremely healthy. Nothing is happening. That's the only thing. It's just to show, look, I have a lot of traffic. It's like you are operating a website, you know, and you have 3 competitors. So you can get a beautiful feedback from your customers. Well, if your competitors are not getting that beautiful and nice feedback from its customers, that would be something that plays in your favor. But usually people don't want to see 3 or 4 feedbacks. They want to see hundreds, because 3 or 4 people could be wrong or even be familiar with the website owner. But if I see hundreds and hundreds and thousands of beautiful feedbacks, obviously 1 can be wrong, maybe 10, but not thousands, right? Well, the same is happening here. If you are running a centralized exchange and your centralized exchange is showing you huge volume compared to the competitors, what do you think is going to make a newbie? Oh, look, they have much more liquidity there. It's not only the retailer, it's also the institutional, it's also the whale who is just looking for a bigger grade of liquidity. I mean, in case he knows that not wash trading is involved here. So, but it's happening. 70% only on, oh wait, on Coinbase, Kraken and OKX and Huobi, more than 50% in Q2. I mean, even there, Coinbase, Kraken, OKX, it's crazy, because I was noticing that Kraken was, no, not Huobi, I'm not tracking Huobi, but OKX and Kraken, but mainly Kraken, I was noticing, and you remember where it's strange that they are now trading with more volume. It was really strange. No, it's indicating no, it's just wash trading. It's just nonsense wash trading, just to fool you, just to show you how beautiful, how good everything works. And obviously BlackRock now refiling for its spot trust, because it's not an ETF. Even the last moron will just notice it later on. But the spot trust what they are just creating and what they are refiling for, because that's what, I mean, the application content is the most important piece of this application. And it says trust, not ETF. It doesn't say ETF. So it is a trust. And that's a difference between an ETF and a trust. Even when you can also modify the trust that comes a little bit closer to the ETF. But it's a different thing. Because while they can apply for a trust, the possibility to get approved is bigger than with an ETF. Open end, closed end. Okay? ETF, I'm selling shares and shares and shares, and then I need to rebuy Bitcoin. While trust, I have a fixed amount of Bitcoin and a fixed amount of shares. So you can buy and buy and buy, but it's limited. So obviously that was one of the topics that in November 2021, the regulators in the US ECC had on the table. They mentioned two cases: market manipulation with spot, indicating if it's an open-ended asset, so like an ETF, and they start to sell shares, maybe to other companies involved to centralized exchanges, they could just push the price up, because then they will obviously artificially buy Bitcoins over the Coinbase. It would be Coinbase, because now they listed Coinbase as their exchange. Well, I mean, that the ECC sued just Coinbase recently, it's not going to be a big problem for BlackRock's application, I guess. Usually it should be. We will see if that's going to happen here as well. But, and that's another thing. I mean, if you have one thing that was in particular just mentioned in the big rejection in November 2021 by the ECC, market manipulation. Okay, let us say it's done, because usually BlackRock has already all these Bitcoins there, and they just want to create a trust with that and to sell the shares. So everything is fine. They are not going to manipulate the market, just buying more Bitcoins, more Bitcoins, more Bitcoins, and so on and so forth. So it's great in ECC's view. But they also mention a second thing: market manipulation happening because of Tether. And that's something where I ask myself, what happened? What changed? Nothing changed. It's even, well, we had Tether just in the past, and now we have BUSD and TUSD on top. So what happened? What changed? I don't know. I really don't know. People think just because BlackRock has huge bull's eyes, balls. I just wanted to say balls. Why eyes? I don't know. Because of German. Yeah, okay, that makes sense. Bull's balls. They think ECC will say, yeah, obviously, let us make that. In my opinion, if they do it, okay, then we are extremely done. Then forget any kind of regulation. This market will become the big cash cow for the financial institutions. I remember when just in 2021, when the whole thing started, to receive a sharper view of what regulation can mean for the market, Deutsche Bank and Goldman Sachs were the only two banks who just mentioned hitting their regulators, please don't over-regulate this market. What does it mean, over-regulate this market? So you are saying don't over-protect the customers? Or don't over-try to fight terrorism finance? Or drug dealer money laundering? What exactly was your purpose to make such a statement? Don't over-regulate the market. What is over-regulation? Not even the fucking banking system is over-regulated. And sometimes I think it will be required to do it. I mean, how many cases of scam and, I mean, illegal activity related to banks happen in the last decades? I mean, we can talk about X-Scam scandal, Wirecard scandal. We can talk, I mean, we are talking about regulated institutions. So overregulation is not cool? Well, why not? Because at the end it doesn't matter if it's overregulated or not. At the end, the regulation has to have any effect. And that means to prevent any kind of illegal activity and to protect the investments of retail and obviously also for the big guys. But if the big guys are in a position to manipulate the market, please don't over-regulate the market. It's really interesting. It's really. But it matches very well to what the philosophy of this market is becoming. It wasn't the case, in my opinion, in 2020. I don't remember it. I mean, I was a lucky guy because I started with crypto when crypto was just mooning. Oh, close before. It wasn't mooning yet. I really jumped in when everything was on its final preparation. I just started with, yeah, now you can laugh, but Ripple. I really started with XRP. That was my first investment in crypto. It wasn't even Bitcoin. It wasn't even Ethereum. It was XRP. Because I just come from the banking sector. For me, it was obvious that XRP has, at least in my view at that time, the best business case. Then I started to ask XRP, okay, but if you have the network, why the tokens? For what? What is the purpose of the token? I started to research, to read, and then I said, okay, it's not required to have a token then, so why to buy them? To support the technology, that's a great thing. But it's going to offer me something, DeFi, with yield, and so on and so forth. I don't know. To be honest, I sold my XRP back. Even I start love their technology. The ledger is amazing. Okay, the network is amazing. For the business case, for the banking, for the global banking system, it's really great. Then I started to buy altcoins. Just to check, to test, and I have mentioned so many times, I was holding over 50 different tokens in my portfolio. I don't remember, it was Atom, oh Jesus, I was just looking a sheet, Excel sheet in my hard drive with all the tokens I own. It was incredible. It was really incredible. 50 of them. Some of them I just purchased for 60 bucks, 100 bucks. My investment wasn't that big at that moment because, you know, it was something relatively new for me and I just wanted to minimize my risk because that's my pattern. I always try to minimize my risk. I'm not the big enemy of the reward, but I'm the enemy of big risks. So, you know, that's my pattern. I know you will say, who cares? Yeah, that's fine, but for me it cares. So I started to buy all of them. I spent, I don't know, maybe 15, 20 grand or something. It wasn't really big. And then they started. They started to push up the Bitcoin price. They started hard. Then Elon Musk came and also said, Tesla is going to buy Bitcoins, and then it was unstoppable. It was just unstoppable. Now we can say, was that market manipulation? No. Maybe, yes. Elon Musk? I don't trust him. I don't trust him. I'm very honest with you. I don't trust him. I mean, I don't trust almost anyone, but I don't trust him. okay, to be bullish just in December, January 2021, and to be bearish then in April, May, then to think, maybe Bitcoin. So, and everything else, while the biggest and most smart entity related to Bitcoin was distributing, and always then, close before every single dip, rebuying, not filling all their bags, but rebuying. And then when we started to go up, some fake news came out. You remember, that's because it was just really a shock for me in 2021. It was in March and April. I don't remember what Janet Yellen just did this rumor that crypto gain should be taxed with 80% or something. So the price just nuked. But afterwards, when I started to use on-chain data, and when I started to make my analysis with entities, for example, to see that they have different behaviors, and that the market maker entity with 1,000 to 10,000 Bitcoin wallets were absolutely the best one. It was a demonstration of insider information. It was showing that always before buying the dip, then let the price go up, and then something like a rumor from Janet Yellen happened, and they started to sell big. Close before everyone started to follow. Every single time. I mean, these guys didn't start to accumulate big. It started to lift up, but just because we are receiving some wallets from other entities. So that's why the balance is lifting up, but they are not accumulating big like they did, for example, in 2021. So we can talk about if Elon Musk was the key player in 2021 in manipulate the market. Maybe. I don't know. I really don't know it. But fact is, it was smelling extremely strange. I remember just my altcoins. They pushed up sometimes, it was crazy, 600%, 1000%. So it was feeling like, okay, it seems fuck regulation, we are just hitting mass adoption. Yeah, the whole thing was working well for 3-4 months, and then later on we nuked hard. We nuked. Take profit. That's what some people would say. They were just taking profit, cashing out a little bit. But at that time, at least, they started to accumulate again. They started to use every single dead cat bounce just to buy. To buy. At least the market maker entity. At that time, I didn't know that. And for me, it was looking like, okay, that's shit. I mean, it seems the whole thing was like a pump a dump, just in higher time frame. But that's it. And then I started to see the entities and I said, that's really strange. Why they are buying? So, but then it wasn't Elon Musk anymore who just announced something bullish and the price went up. No, it was FTX CEO Sam Bankman-Fried. He was the guy who started to buy 75,000 Bitcoins July 21st. That was the beginning of a new bull run that just sent us to a new all-time high. While all these big guys were just distributing everything they accumulated just close before, and they didn't buy more. I remember I was in August and in September just saying, Jesus, they are cashing out big. We were told sometimes just in a few days, billions and billions. You can check my Twitter because of that. So when people are saying I'm a perma bear, fuck you. I was extremely bullish in 2021. I guess even more than you. But then I noticed something changed in this market. It wasn't spot ETF. Spot ETF is not the key. It's not even the key for all institutionals. That's just a piece of the puzzle. So if they really, I mean, it looks like spot ETF is required for this market. Otherwise what? Otherwise what? We have a futures ETF, not only one. We have spot ETFs abroad. Hey, the spot volume declined a lot. This market, something happened with this market since 2021 and it didn't recover. And it's not recovering. And when people talk and say, but the cycle, forget cycles. Forget cycles. That's a market that's not much. I mean, it's not even mature. Yeah, it's not mature. It's not mature. Oh Jesus! Sometimes English is really pain in the ass for me. Anyway, but what does it mean? That you can't be like Plan B and make just even from intellectual level. I would say that's a great stuff what he is providing. But that only works with the market that is solid, you know, where the trader structure is fixed. Any other market doesn't have this dynamic like the crypto market, because the crypto market is in a situation, it's not black, it's not white. It's not regulated, but it's also not completely unregulated. So, you know, we don't have just the liberty to say, I just want to apply for a new spot ETF. We can, so it's very limited on one way, but absolutely free on the other one. And all these brings a fluctuation of traders, retailers, but also institutionals. And just to make cycles does make sense. You can do it with a market that exists since 20, 30, 40 years. But it doesn't make sense to make something like that in a market like the crypto market, where I'm saying over and over again, we are like pioneers. In 10 years, everything will look totally different. And we will say, oh, you remember when you are going to talk to the son of your son, who is going to say, oh, I just bought for $50 Kluki. What is Kluki, my son? Kluki? Ah, Grandpa, you are so old. Kluki is the new best token on crypto. And you will say, oh, shut up. Shut fucking up. But yes, that's how it works. It's marketing, and the new generation will absorb all that crap. They will say, it's great, PP coin or Boo Boo coin or Gluk Gluk, Gleek Gleek, it doesn't matter. If it sounds infantile, even better. That's what we need. Because at the end, it doesn't matter about the use or business case. I'm talking about the current situation. It's only about liquidity. It's only about to get money back to crypto market. And that's a huge red flag. That nobody, well, it doesn't matter if you are taking into account all of this or not. Because the mass of the crypto community is ignoring almost everything. They don't care about anything. The only thing that they care is to make 3% per day. Just to have the feeling, I'm 2 inches closer to my Lambo. Welcome to my show. Let us go forward.